Hey traders, Nick Shaheen here recapping the week ending Friday the 13th. Ooh, scary. What was scary was the result for today. The scoreboard for the day, Friday, expiration day, it was red across the board. 145-point decline on the Dow. The SPX lost 12, 21 on the NASDAQ, 4.5 points on the RUT. So the declines are 0.82 on the Dow percent, 0.61 on the SPX, 0.5 almost on the NDX, and just 0.36 on the RUT small caps, which are fared the best. So bad day, correct? It was much worse. Here it is right here. This is the S&P. So the low of the day was 2032, and we definitely, salvaged that part. The NASDAQ, also the decline in the NASDAQ has not been pretty of late. So, but it could have been worse. The win of the day, the win of the week, is for the small caps. Look at how low they went in the morning, meaning they led down, which is what I expect on sell-off days. However, they completely rebounded and closed the strongest. In fact, they could have closed green had the S&P or the NASDAQ and or Apple joined the party with it. So this week, any which way you slice it, was a win for the bears. This is the S&P, and this is the beginning of the week right here, and we trickled down. So any which way you slice it, it was a win for the bears because we had a hard sell-off with fear. We took 2 days to bounce, and we finally bounced on Thursday. And then we let it go today. And in fact, today was another scary day start. However, we managed to eke out a decent close and not a disastrous close. All right, so this is the best company on the planet, Apple. And it had a hoopla day, right, on the 9th. That's the beginning of the week right here. So if I were to zoom on this week right here, and this is where we were coming into the week. Everybody talking about it. Watch this, watch that, app this, app that, on TV, CNBC, Jim Cramer, Colin from Tim Cook. Everything going its way, and it managed to drop to 121.63, and then, yeah, it rallied, but then again, it gave it right back up. 122 and change was the low of the day. So that is, if this is the best company on the planet, wow, I mean, that's serious trouble. Google had the Goog, not the Goog-L. It had the pretty funky open interest data, and one of the scenarios that I said was going to happen was Google 547 or so. Sure enough, today out of the blue, boom, down $8 to $10, 547.32 was the close. So dead on as far as forecast. So don't be too don't follow what you see in the news, and just develop a thesis and trade your own thesis. This is oil, need I say more, down in the 44s today. All right, so it's a red day to end the red week. However, not a red week for the small caps, and this is the SPY, SPY, which is the S&P 500. 3 red weeks in a row. This one doesn't really count because it was barely red, but 2 definite red weeks, and we're headed towards the lower end of the trends and high volume. All right, the other side of it, which is also scary, well, not happy, are the Qs, which represent the NASDAQ. 2 red weeks, emphatically red this week. High volume, probably because of Apple. IWM represent the small caps, the happiest of the bunch, in fact, the green week, if you can believe that. So they have been relatively outperforming, and last time they did that, it was down here, and we had a rip-roaring rally. However, these are weekly candles. However, we're doing it here, but at close to the all-time high levels. So, I don't know. Here it was sold off 10 to 30%, something like that, because the highs were up here. So, kind of conflicting here. So be careful. So what do we do? What do we do for next week? Unfortunately, next week we have a Fed event. Fed events are make things binary. What does that mean? It's a coin flip. It comes on Wednesday. Everybody wants to see one term, patient. If the word patient is out, then they're going to assume that a rate hike is coming in the next 2 months. so they will sell off. However, if the Fed does that, I bet you they will say something, patient word is out. However, that doesn't mean we automatically want to raise rates in 2 months. We are data dependent, as we've been telling you for months. Therefore, we're going to watch it month to month, data dependent, data dependent. So the initial reaction will be whoosh down, and then, wait a minute, they're saying not in 2 months? Okay, maybe I can buy some, and they're going to, maybe even rally back. If they don't take the statement out, they keep it patient in there, the market will assume that it's not coming anytime soon, and we're going to rally. Now that is a relief spot rally, a rally fueled by one thing, which is something bad did not happen. The bad thing is the removal of that word. They didn't remove it. Something bad didn't happen. They're going to pop. These are pops I like to short cautiously. And now the only pop I would not short on that event is if out of the blue, and I can't imagine they do that, they go out and say, you know what, they open the door for more QE. Crazy, nobody's talking about it. But hey, it's a scenario. If they open the door, say, oh, we're seeing, retail sales is falling off a cliff, this is bad, this, this is dollar, strong dollar, blah, we got to do something, so we're going to do more QE, then there'll be a huge rally. And that is a rally I let loose for a little bit. I won't short it immediately. I'll have to pick my own levels. Because why? That changes the macro somewhat. The macro thesis has been the same. QE dead. Fed still accommodative in a sense where they're dovish. And they're going to start raising rates sooner or later. So not taking the word out will make it later. Taking the word out will make it sooner. These don't change the thesis. However, add QE back in, boom, we got a new variable that wasn't there before. That changes the thesis, so I can't blindly short it, okay? So be mindful of those things next week. How do you trade that? You don't trade next week's weekly expirations. That's just for the very nimble, and it's even then binary. I don't like to risk my money based on a coin flip. Who knows what they're going to say? One. Who knows what the markets are going to react? How the markets are going to react to what they're going to say? Two. That's a double coin flip. That's more gambling. So what I'll do is I'll use credit spreads or debit spreads, whichever way you trade. Further out away from current money, current price, and further out in time. And so instead of playing next week, I'll use the week after, or the week after, or even September, or June, or May, whichever month I prefer. Just stay out of trouble. And then you can set better trades after the fact, knowing what's going to happen with the Fed at least for another 30 days. We do have other economic reports between now and then, and from Japan, I think, and the U.S., but the biggest thing is the Fed event. Everybody's going to be focused in on the Fed event. So we may meander until Wednesday or closer to Wednesday, and we'll see what happens on Monday. There were a few things that I was asked. For example, will we bounce into the monthly expiration? Monthly expiration is next week and Friday from today's drubbing. The answer is it depends on the Fed. Coin flip, baby. It depends on the Fed. All right. So the way the markets are set up is they're like trading sentiment. You have the same setup going into next week, meaning there are super bulls and super bears. I see people expecting 1280 on the small caps, for example, when they're right now at 1230, and I see people expecting 1130. Who's going to win? I don't know. I vote with the lower ones just because it's a coin flip. I flipped the coin, that's where I went. Until then, until the event happens, I won't take sides. Okay, so momentum stocks today got killed, so maybe risk appetite or not here is absent. Oil got clobbered. The market direction is almost certainly down, at least that's how it looked to me this week. The pins on the SPX were where the high open interest lied. So it is, you can argue either side is what I'm trying to say. So be cautious. If the pros don't know, what makes you think you know better than the pros? So trade accordingly or not trade accordingly. All right, so the variables that are in play are still the same. Fed, the rates is at the top of the list. Greece, forget about it. The euro, second at the list. Its strength in relation to the dollar. EQE, meaning the QE in Europe, also important, but not as important, and because it's on rails. And the TNX and the TLT. So the TLT represents the bonds, And yes, they were red today, but barely so, and they're still in breakout mode. Conversely, the TNX represents the 10-year rates, and it looks like they fell back under the yield resistance, which was a line that I've drawn, not scientifically right here. So, and now it's tight, and now there's a move coming, a break down or break up. Okay, coin flip. This breakout made it look like it was going to here. The breakdown will probably bring it down to lose 20 again, in which case the TLT will break out into the 131. I drew this line a little bit ago. So again, direction unknown. It's above my pay grade and most other people's pay grades, whether they admit it or not. All right, so the ranges are still in play. Let's look at the S&P yearly. Each candle is 1 day. We need to hold that green line. We've pierced it a couple of times. October correction, we need to hold it, we as in the bulls. This candle completely engulfs this candle with the tails, and it closes inside of it, so kind of a strange setup there. And the volume, way bigger than the green day. Never good. Expiration day, fine, but don't like to see that. This is same kind of action in the candle, and these are the NASDAQ, the Qs. And I've always said they need to hold here. Okay, it looks like they pierced it today, but they did hold. So, but it's ginger. The best of the bunch really is the IWM, which are the small caps. Look at this candle. Oh my gosh. Yeah, lower low, not higher high. So that candle is fantastic to look at. Massive, but bullish because they rejected all of this low part and they closed close to the high, closer to the high than the low, I should say. However, I drew this yesterday. It's still here. Well, let's see what they do next week. And this is the all-time high, by the way, folks. This is the all-time high, okay? So we are pretty high up there. A few stocks to look at. Obviously, we always want to look at Apple. Again, this green box I drew recently, it's fighting for its life right here. This is the best company on the planet. Now we have lower highs and lower lows, except for these two candles there. I don't know. I expect better. I expect better. Let's look at Google. Let's look at the Goog. This breakout, we took advantage. We bought some puts. We cashed out the puts. So now it looks like it rejected the bottom of this, and it's closing on it. And the question is, where does the market go? If the market goes south, I would not be surprised to see Google in the low 5s. Okay, I'm not making that call. Monday morning, I'll give us more clearer levels before the open. Priceline, today also we made some money on Priceline per my announcement earlier saying I'm short Priceline, and I gave a few ideas. It's trying to close this gap, and the low end of it is 11.30. I don't know if they'll get there, but today it lost $28, and it was worse than that. So it did rebound, see, off the low. If I zoom in, you'll see that it closed a little off the low, but not by much. I like this, every big candle is all. So again, if the markets rebound, it will rebound, and it rebounds quickly. Let's see, a few other stocks that we like to look at. I did make a call on the Exxon. I made a video on that, and I know a few of you took shorts in those based on the video, which is very nice. And look at that. They broke down. Today, they were down big. They did rebound, but look how terribly down they were today. So that was timely. And the video I did was based on technical patterns. You can probably see right here. I said, you break this, you should be headed here. Maybe it happens, maybe it doesn't happen. Back to 1 year, that was Exxon. I'm trying to see what other stocks we usually look at. BABA. Everything was red today, basically, that we care about. The VIX, we had a few bright spots, like Intel and company, but the VIX was up 4%. It's overkill for as little as we were down. But yesterday's reaction in the VIX of being down 9 or 10%, whatever it was overkill. Meaning this candle was too much, this candle is too much, they kind of cancel each other out. I don't trade the VIX, I just use it as a gauge every once in a while. All right, so again, to recap, we had a very negative week when people were over-exuberant and were going to the moon. The shorts, the bears won this week, any which way you slice it. Next week, completely depends. Completely 100% depends on the Fed and the reaction to the Fed. That's like having earnings for the whole market. And I do not put money in the face of trouble on a coin flip. That's more gambling than actual investing. And I suggest anybody that trades cautiously should do the same. The best trades on events like this are just after the event, because now you have information of what they said and how people reacted to it and how that affects your own trading thesis, and then you can set a trade accordingly. Send me any questions that you have, any specifics. I've got a lot of questions this week, all smart questions. I have a few coaching one-on-one and sessions, and those are really rewarding because I can see the progress incredibly fast. So any questions you have, shoot them, and I'll get you back right away. 15 minutes, how about that for a weekend recap? That's not bad at all.